Have you ever opened a trade and then you went to sleep and the next morning your balance changed even if price did not move? That's because of something called swap. In Forex trading, swap is the interest fee that you either earn or pay when you keep a trade open overnight. It's like the cost or reward for borrowing money to keep your position open for more than one trading day. It is small. Swap is usually small, but over time it adds up, and if you are not paying attention, it can eat into your profit. And that's why it's important for us to talk about swap in Forex trading. Now, the question you may be asking is, why does swap even exist? And to understand why swap exists, you need to remember one thing. Every time you are trading Forex, you are trading one currency against the other. This means that you are borrowing one currency to buy another currency. And just like in real life, when you borrow money, you either pay interest or earn interest, depending on the interest rate of the currency pairs in question. Now let's break it down so that it is very easy to understand. If you are buying a currency that has higher interest rates than the one you are selling, you could earn swap. On the other hand, if you are buying a currency with a lower interest rate, you will likely pay swap fee. Now, this is why brokers charge swap. They are adjusting for the interest rate differences between the two currencies and passing it on to you if you hold a position overnight. It's like your broker saying to you, hey, you are holding this borrowed position overnight and the bank charges interest, so we have to reflect that. So there you have it. That's the logic behind swap. It is just about balancing the interest rate between the two currencies that you are buying or selling. So now you know this. Let's see the different types of swaps. There are two main types of swap in Forex trading. The positive swap, that's the swap credit, and the negative swap, that is the swap charge. First, let's talk about the positive swap. The positive swap is when you earn money for leaving a position open overnight. This happens when the currency you are buying has a higher interest rate than the currency you are selling. In simple terms, it's like your broker saying, you are holding a strong interest currency, so here's some bonus. For example, if you buy AUD/JPY and the Australian interest rate is higher than Japan, you may earn positive swap. Negative swap is when you pay a fee for holding a position overnight. This happens when the currency you are buying has a lower interest rate than the one you are selling. And yes, the negative swap is more common, and that's why traders usually see a drop in their account balance when they have a position opened overnight. The negative swap is just more common. There's also something called swap-free or Islamic account. Let's quickly talk about that. Some brokers offer swap-free accounts, especially in Islamic countries where interest is not allowed. In these countries, you don't earn or pay swap. However, you may want to be careful because brokers may top up other fees to cover for interest. Now you know this. Here are some things you want to check every time you are trading. First, you want to check if you are earning a swap or paying it. So you want to know if it's going to be a positive swap or a negative swap. And you also want to know if you are not seeing any swap or if your account is swap-free with hidden costs. So if you are using a swap-free account, you may want to compare the spread on your swap-free account with the spread on accounts that charge or pay swap. Now let's move on to how swaps are calculated, because yes, sometimes the calculations may seem all over the place, but it's important for you to know how these things are calculated so you know how it affects your profit. And don't worry, while we are going to show you how to manually calculate swap, you don't always have to manually calculate it. You can always use a calculator. Some brokers offer swap calculators. For example, Xness has a calculator, a trading calculator that also calculates your swap. So you don't always have to manually calculate. But here's how to calculate swap. First, we know that swap is calculated based on the interest rate of the two currencies in the currency pair. So here's how it works from there. First, you compare interest rate. Each currency has an interest rate set by its central bank. For example, let's say that the US interest rate is 5.2%. And for Japanese yen, let's say that the Japan interest rate is 0.10%. If you buy USD JPY, you are buying USD and selling JPY. So you can earn a swap because USD has a higher interest rate. If you sell USD JPY, you are selling USD and buying JPY. So you are likely to pay a swap. Now, the next thing is you want to apply your broker's formula. Your broker uses a formula that includes lot size, swap rate for that pair, number of nights held, and direction of trade. That's did you buy or did you sell? So let's see an example, like a rough idea, because sometimes maybe different brokers can have slightly difference in their formulas. But let's see a rough example. So let's say you open one standard lot on USD JPY and your broker shows a swap rate of minus 1.5 pip for buy and plus 0.5 pip for sell. If you are buying, you pay a swap of minus $15 per night, and if you are selling, you earn a swap of $5 per night. Please note that real values may vary depending on broker and market conditions. Now, another thing you want to keep in mind is that on Wednesdays, brokers can charge swap that is up to 3x more than the swap for other days. And this is because on Wednesdays, brokers usually add weekend fees. So be very careful keeping a position open overnight on Wednesday. Now, let's quickly see a practical example so it's easier for you to understand. Let's say you are trading gold. That's gold versus dollar using MT4 app or your broker's platform, whichever one. Now you check swap rate inside your trading app, and here's what you might see. So let's say you see swap long as minus 4.20 and swap short as plus 1.75. Now you should keep in mind that swap long is what you pay when you buy, and swap short is what you earn when you sell. So if you buy one lot of gold and keep it open overnight, you will pay $4.20, and if you sell one lot, you would earn $1.75. Now imagine you hold that position open for 5 nights. That means for long trades, you are going to have like 5 times minus 4.20, that is $21. And for short trades, you are going to have $8.75. So you see that even if price does not move much, the swap is affecting your account balance daily. This is why you want to pay attention to swap, whether you are earning or you are paying. Now here's how to check your swap rate on MT4 or your broker's platform. Go to Quote or Market Watch, click on the symbol. So for example, let's say click on Euro USD. Then click on Specifications or Details. Scroll down and you'll see swap long or swap short. Always check this before you plan to hold a trade overnight. Now that you know what swap is and even how to calculate it, let's see why swap matters depending on your trading style. If you are a scalper or day trader, you don't have to worry about swap, and this is because you close all your trades before or by the end of the trading day, and swap is only charged for trades that are left open, like after close of market, that's after 5 p.m. New York time. But here's a trap. Sometimes trades don't go your way and you feel the urge, the temptation to hold it open and to keep it open overnight. In this case, if you are trading a pair with high negative swap, you can lose money just from fees because you left that trade open overnight, even if you have a floating profit. Moving forward, if you're a swing or long-term trader, swap is important. Holding trades for several days or nights means that swap can build up and it can eat into your profits or increase your losses. Imagine that you are in profit by $50 and your swap for 10 days is $35. How much exactly did you make from the trade then? Because your real profit now is just about $15 and you did not exactly plan for it. That's why you always have to factor in swap when making your trading decision. There is also something called carry trade, and that is when traders try to take advantage of swap to leave a position open overnight. And pro traders usually do this. But there are some conditions that need to be in place for this to work. You have to buy a currency pair with high interest and sell one with low interest so you can earn from the difference plus any price movement. Next is that the swap rate has to be high enough. The swap rate definitely needs to be high. And then you also need stable market conditions and proper risk management. Here are some quick tips to help you manage or use swap to your advantage. First, avoid high swap or use smaller lots. If a pair has high negative swap and you feel the need to hold it overnight, then you want to consider using smaller lot sizes and reduce your holding time. So reduce the number of days that you keep that position open overnight. This way, you should be able to reduce the damage from negative swap. Next is that you want to know your rollover time. Most traders apply swap after 5 p.m. New York time, which is midnight MT4 server time. If you want to avoid swap, make sure you close trade before that time, before the rollover time. You should also keep in mind that if you keep positions open for a very long time, you can consider reaching out to your broker to know if there's a swap-free options for you. And you definitely want to consider the trading conditions in the swap-free option to the trading conditions in the swap option, because like we said, sometimes swap free options usually come with higher fees like spread and commission. So you want to do the math, cancel out, and know which is exactly better depending on your trading style. Now let's talk about swap free accounts and what they don't tell you. First, swap free account is not only for Muslims. Yes, Islamic finance was the initial reasons why brokers started providing swap free accounts. However, today some brokers now provide swap free accounts for everybody, not just Muslims. For example, brokers like XNext, HFM, and even Just Market offer swap free account option. You can request for swap free and it will be granted. But here's the catch. A swap free account option does not mean that that account will stay swap free forever. Even if the account is labeled swap free, that benefit has an expiry date. For example, some brokers will allow you hold a position open overnight for up to 30 days. And after 30 days, they will start charging what is called admin fee. And this is deducted daily. You should also keep in mind that brokers monitor how you use swap free. So let's say, for example, because your account has a swap free status and then you now start trading only at night, because you know that you are avoiding swap, so you trade at night and you leave positions open overnight. When brokers start monitoring this behavior, they can decide to end your swap free status and return your account back to a regular account where you pay swap. You should also keep in mind that not all brokers advertise their swap free account options. Some brokers do not advertise it, but if you reach out to them, say you send an email or you speak to customer support, they may set up a swap free account option for you privately. When it comes to swap, different brokers have different rules. Some brokers may only allow swap free for certain instruments. Some brokers may not charge swap, but they have admin fee or other hidden fees. And some brokers may only offer swap free option to certain regions. So before you jump in, you want to verify from your broker how long the swap free status stays, what instrument you are able to trade and you will not be charged swap, and then finally what other hidden fees or what fees come after your swap free status. So yes, before you go to bed with an open position, ask yourself, am I earning or am I paying swap? That question can save you from some damages. I really hope that you found this video helpful. If you did, don't forget to subscribe to this channel because there are so many more videos on the pipeline that will be very helpful to you as well. And of course, give this video a thumbs up and let me know your thoughts in the comment section. Thank you.